All right, what's up, everyone? Welcome to today's live stream and live trading session with Dirk Hartig, not Hartig, Dirk Hartig from PrimeXBT Academy. So today we're going to talk about the crypto markets and the legacy markets, see what's happening in the markets today. How are you, Dirk?
I'm very well. Thanks for asking. Hello, everybody out there, and welcome back to our bi-weekly discussion here. I think a lot of stuff has happened since we talked 2 weeks ago. So let's see that we can catch up on the menu today. I think a lot of stuff about risk on market suddenly again that we need to talk about. I brought quite interesting chart on Bitcoin, where I discovered something last weekend which makes me actually happy, and it promises that we might be seeing nicer times soon on the crypto markets again.
Yeah, a lot of things are happening. So we did have, I'm not really sure what caused, like what, if we had anything being a catalyst for this, but we did have the CB consumer confidence economic news release yesterday at around 1600 our time, and that was around the time when this these moves started appearing. So I do suspect that I haven't really checked that out, see what the news were all about, and but I'm pretty sure that it might have shown that the basically weakness for the USD, right?
Yeah.
And I guess it all comes down to the chances of the Federal Reserve, continuing its tightening as aggressively as they have said they would. So I think it all comes down to inflation and interest rates at this point. And
Absolutely.
I guess people are now thinking that there's a slightly higher risk of the Fed taking it a little bit easier, right? Because we are seeing the S&P 500 did rally quite nicely. I mean, I kind of want to start off by I have a trade open on the S&P 500, so I just want to show this right here. So I got this open on PrimeXBT. So you guys know that you can go to the link in the description below and join PrimeXBT. You can use the code, and I will be sending out a couple of 10% codes in the chat during the live stream. I'll send one out right now, so you can check that out and use that code to sign up and get up to 10% bonus on your deposit. So definitely worth checking out. This is the long I have on the S&P 500, and I want to show you guys something here. You can actually copy over, if you have two charts open on TradingView, you can actually copy over the drawings directly from this chart to this one. So sometimes I have different chart layouts. So you can see right here I have a 4-hour RLZ slingshot chart layout. This is for all my swing trades and my 4-hour setups, and then I have another chart layout which is for the 1-hour setups. And sometimes I'm like the 4-hour is my main layout, and sometimes I'm taking the 1-hour trades on the 4-hour as well, which is I'm not meant to do that. But a cool thing about TradingView is you can copy over the drawings just by doing copy pasting, and they will be copied over to the exact same place. Is this the very time efficient way of copying it over? Because I'm pretty sure some of you have done this mistake in the past, where you have a different chart layout up than the one you originally planned on taking the trade on. So this is now my swing trading layout, which is empty. So I moved over the 1-hour setup to this one here, and they're exactly the same. So I want to kind of go through this this trade right here, because when I'm trading on the 1-hour, it needs to align with the 4-hour. So the 4-hour system is basically based on Yeah, it's very simple. You have a trending market, and whenever there's like a pullback, this is for longs, obviously. Whenever you have a pullback, you want to go long on that pullback only if the pullback happens on the inside the reload zone around the 0.618 or the 50% fib with stochastics RSI aligning with that. So stochastics RSI would be below 30, and you would then have some type of rounded bottom, maybe bullish engulfing candle, something like that on the 4 hour. So on this, and it also needs to happen on the 4-hour 20 EMA. So on this 4-hour chart, you see that the 4-hour 20 EMA is all the way down here. There's no, like, it doesn't really align with the 4-hour setup because it would have to come down here. But what's happening on the S&P 500, you have a very good break and retest of this level right here, which also kind of aligns with a major level. You could draw it something like this. But it's basically the daily 50 EMA, which is right here. You can see how there's a pretty good level around that area. But there's no setup confirming on the 4-hour. But on the 1-hour, everything that has to be in alignment on the 1-hour is for price to be above the daily 50, above the daily 20, and above the 4-hour moving averages. And the setup would then repeat itself exactly as I described, but on the 1-hour 20 and 50 EMA, which you can see is this cloud right here. So you can see the price comes down, it breaks the level, it retests the daily 50, complement with the 50% fib, stochastics RSI is giving you a bull cross and what looks to be a possible bottom formation right here. And I would then trade this based on the 1-hour up to this level. And this whole idea is based on the fact that we are seeing a risk on push right now. It's very obvious. If you look at Bitcoin, yes, it's too early to celebrate. Like, it's way too early to celebrate because if you look at Bitcoin, we're basically coming right up to a resistance area, and one could also argue that this is the range, like the range highs of a lower time frame range. So that range high is also a high time frame resistance. It's way too early to celebrate. But if you look at USD pairs, you can look at the GBP USD, for example, we are seeing a possible breakout here on GBP USD. So the weakness from the dollar is quite obvious. But again, it's too early to celebrate because if you look at the daily, the downtrend is quite obvious. It's still a downtrend, but nowhere in this trend have you seen this type of formation, which is basically major higher lows hitting resistance. So this could very well be, I mean, if we start something like this, in hindsight, we would say that this is the obvious bottom formation. So sometimes when I'm analyzing the market, I try to look at the current price and say, if this actually were the high time frame bottom, how obvious would it have been, looking back? And I think this looked quite obvious. But again, it's way too early. We only have one daily. I mean, if you look at this level right here, we only really have we don't even have a daily candle closing above this level. And again, we have a question on the dollar currency index, and these are my thoughts on the dollar currency index right now. We have an uptrend, right? So we do have an uptrend right here, and the uptrend is not really broken. We have signs of a potential range forming right up here, and if we look at how trending markets move in cycles, this could be a distribution range, if you want to use that word. But if we move like this, we have a break in market structure. So the first signs of this trend actually breaking is happening, but again, it's not confirmed. Do you agree with this analysis that there's a possibility that we're entering a risk on environment?
It is. I mean, first of all, it's kind of a mental relief also to see that there's still blood circulating in the market in terms of risk on. So this is something also I think we shouldn't undervalue. It gives like hope again. Maybe if you can share my screen quickly, I really would like to address especially the US dollar index there. We go. Are you showing mine? Yeah. Okay. Great. Good. So really, basically, what Lip just said. It's a breaking structure we are seeing here. And I kind of want to remind everybody also that I think it was like 4 weeks ago when we were up here, we discussed this probability also that we might see a takedown. And I think we also put our money where our mouth is back then. There's still the possibility, especially if I look here at the RSI, that we go lower. However, like Lip just said, what we need to see in order to really see a break in the structure is now a lower low than this one back here, preferably even something where we go lower than this. If we go lower than this, especially here also this area of around 108, then I would say, yeah, this seems to be that either we immediately enter a downtrend now again, where the US dollar is going to get weaker, or more probable would be that we see then an extended sideways range first, which we haven't had in a long time in US dollar denominated pairs. It was either an uptrend or an immediate downtrend. I rarely have seen a sideways trend in the last years, I have to say. And I think it's kind of the same picture here also in the S&P 500. We had this nice bounce of this what I've been calling the soft landing zone now for a while already. Also remember here, this was drawn in a couple of months ago already. So I'm happy to see that. The thing I'm a bit worried about is that the move we are seeing right now is a little bit too hectic. So what I was expecting, especially since we still have the interest rate decision tomorrow in the EU, and we're probably going to see a rise of 75 basis points. I actually expected that we are maybe going to, especially the US dollar moves here. So if I look at euro dollar, that we are going to see those after the interest rate decision. So could be a little bit of a non-event, maybe even tomorrow, because you would expect the markets of the US dollar to go weaker, especially against the euro when the ECB raises interest rates by 75 basis points. I think really the initial thing that kind of took my attention was last week Friday, because I've been talking on my Telegram channel and on the videos a lot, like if you want to swing trade, you should have always an eye also on how are the last 30 minutes in terms of trading for the US stock markets on Friday. If we see that the market trends lower and maybe even closes on the lowest price for the day, that usually means it's an extreme weak market. It's a confirmed bear market still, and most market participants do not want to hold on to positions over the weekend. Because, in times like this, of course, there's a lot of stuff that can happen on days where you cannot exit your positions. That is, of course, if you're on stocks or trading Forex. Not so much true for the cryptocurrency markets, because they are trading Saturdays and Sundays, of course, as well. And what we saw there was I don't even know who made the statement, but I read something about a statement from the Fed that they said, yeah, we are still going to raise by 75 basis points in November, but after this, we might go a little bit easier and not have those high interest rate hikes anymore, but maybe just something like 25 basis points, then another 25 basis points. So it's a bit they are like going away now from this aggressive stance they had for the last 2 months, where they said, we are going to do everything. We're going to be very aggressive in fighting inflation. Probably maybe because they are seeing inflation is slowly, really, I can only emphasize the word slowly here, coming down now in the USA, so they can go a little bit easier. And obviously this was something the market extremely liked very much. The outlook of interest rates are not going to rise so fast anymore as we thought maybe 4 weeks ago. And maybe, if they already are saying something like that they want to go easier on how they fight inflation. Yeah, maybe then in 2023, late 2023, we even might have something where the economy is so healthy again that they can start lowering the interest rates again. So this is, I think, what's going on at the moment. And it's a bit of a fragile situation because it can break very easy. Like if somebody there from the Fed makes maybe a more aggressive comment again, or we are seeing extremely bad inflation data 2 weeks down the road again, it's going to break the market. And then we are very, very fast in the S&P, at least here in that zone again at around about 3,600, 3,500 points. So things can go very quickly. Don't be too euphoric yet. But of course, like Lip also said, there's a chance really that we see a turnaround here to the better. And I mean, if you are trading Bitcoin, also here, I've been saying here, since June, we are seeing volatility contracting. Now we are seeing kind of a breakout here. I always call this the Bollinger Squeeze pattern. So where we closed outside of the upper Bollinger Band, the red one here, with a nice strong candle. Usually that means that we are going to see a couple of candles continuing into the same direction. So we could easily go here up to 22, 23, maybe even 24,000 in a short period of time. However, also here, the situation, of course, is fragile. What I would like to talk about also, do you still have some remarks on situation US dollar wise? Or?
No, I think it's pretty clear. It's like you said, it's a fragile situation here. We have news coming out tomorrow, and it's you always get a little bit worried in a scenario like this, because it's like a lot of people get bullish. It's like we're moving, but we're moving right into resistance, and it's like you know how it goes. You hit resistance, news comes out. And when you have a catalyst, it's either we don't know. It's either going to be a catalyst to the upside or a catalyst to the downside. But we have to remember that resistance is resistance until proven otherwise. Yeah. So the chances that resistance is resistance is obviously high. So yeah, I think we need to slow down a little bit and not get ahead of ourselves here. And if you are, like I'm doing now, if with this trade right here, if you are going long based on the risk on sentiment, at least like take profits early and secure that position. And the goal for me here is to secure the position ahead of the news tomorrow, because we've seen this so many times before. I mean, resistance is resistance,
Yeah, I think that's a good idea, to maybe even take a little bit of profit or at least secure the position before the news come out tomorrow. For sure, it's going to shake up the market. Again, we saw this, what was that, 2 weeks ago or a week ago when the inflation data came out. Markets went crazy for like 1 hour, and after that, everything was back to normal. High chance you're getting stopped out then. It's always a gamble having a position there for sure. One more chart I would like to actually show today is here a very long-term Bitcoin chart that I was looking at this on the weekend, because sometimes if I'm not sure about how the situation is, what I like to do is I like to zoom out to get more broader perspective of things, to kind of fade out all this noise we have even on daily charts. We have especially on lower time frame charts like 15 minutes, 30 minutes, 1 hour. And I think if you look at the weekly, or in this case monthly chart, things very often can become much, much clearer. And one thing I noticed, where I asked myself first of all, is there like a correlation between the Bitcoin halvings and the bear market? Because usually we always like to look at, well, there's a halving and this initiates another bull run. And I wanted to look at the other side, looking at, can I see like a correlation there between the last bear market bottom and the halving? And I think I found something that is quite interesting. So if we look here, for example, at 2016, so this candle is the July 2016 candle, because the 2016 halving was in July. And if we go back to where the low of the bear market kind of was, we go back 547 days or 18 bars in this case. And if we, then I thought to myself, okay, was it in 2020 maybe the same? So in exactly here also 18 bars or 547 days before the halving, we saw the low in the bear market here and here. And of course now, because when you're trading, you're always looking for pattern. Every trader is somebody that always looks for patterns that repeat themselves, to kind of make sense of a chaotic system, so to say. So if we go now, the next halving of Bitcoin is probably going to be late March, early April 2024. So I took now the April candle, so to say, of 2024 and counted back 18 bars, and look where I land. I land in October 2022. So if this pattern repeats itself, it means this now is about the bottom of the bear market. It does not mean like that this is like the very low. You can also see this here in 2015. There are still candles, that can tick a little bit lower, or the market can return to those levels. However, if you, for example, would have bought like every single month until the halving, starting 18 months before the halving, you really would have made a bank. It wouldn't really matter also if you bought down here at $220 or up here at 490, or if we look at 2018 to 2020, if you bought down here at 3,500 or all the way up to at 13,000 here, you still would have made a bank, because what we see very clearly is also after the halving, it seems like the halving is always initiating a new bull run, however high it might go then. So if you agree with me on this one, it seems like this and the following 18 months are great opportunities to stock up on Bitcoin, so you can enjoy then probably the wild ride we are going to see after the halving in 2022 to wherever, maybe regions of 130,000, 200,000, who knows how high it can go.
I feel like the longer we obviously had some massive moves to the downside for Bitcoin. I mean, if we look to we've actually gone down almost 75% from the highs at 69K. So and we've already had a massive move to downside. Yes, of course we can go lower. We can always go lower, but the longer we trade here, the better, right? The more time the market gives this environment to form a bottom of sorts. What I'm watching on Bitcoin is, first of all, we're in the area, the reload zone, which I very often use to look at the most interesting levels on the higher time frames where the possible bottom of an asset might be, and we're like right inside that area right now. And we could also be it would be very nice to see the daily kind of form this type of pattern right here. If we do get that forming, if we do come up and test the range high area here at around, let's say, 25K, and then break out and reclaim that area, it's highly likely that we do have a high time frame bottom being formed. And I mean, that move would still be a almost 25% move from Bitcoin. But when you're looking at Bitcoin on the higher time frames, 25% is nothing, especially not at these prices and these lows. I mean, 25% is basically nothing if you look at the history of Bitcoin. And if we're talking about a move up to the to the highs, to the local highs on the higher time frames, it's from the range highs up here. It's still going to be 100%, that 150% move. So huge gains, right? So I think there is a possibility that we are forming a bottom here. Obviously, I'm going to be careful with the words I'm using, because I can't. I mean, I've there's no reason for me to try to predict anything, but if we can reclaim maybe like 22, right? So if Bitcoin could come up and reclaim 22, it gives us a cushion, right? Another support level in case we have a catalyst to the downside, right? So we reclaim this level. Now this is support. If we reclaim this level, now we have support right here. So if there's a catalyst that takes us lower, maybe we'll stop here. So the higher we trade during this risk on push, the better, right? It's obviously it's always going to be better. The higher we trade, the better for the bull case. But I think, you know, the more levels we reclaim, the safer this range becomes, and the higher the probability that this range will actually be. And I do think this is an accumulation range. I do think people are accumulating Bitcoin and Ethereum, for example, in these areas. I mean, I know I'm doing from a, you know, dollar cost average point of view, and yeah, I mean, if it's the case that, because I remember you said in the beginning of the live stream, I remember, I think it was around not FTMO, FOMC. We had one, it wasn't an official statement, I don't believe, like not on the press conference, but we had one chairman, board chairman or whatever, said that he would like to see a 75 basis point rate hike, but then he would like to see it's slowing down, right? And I think that makes sense. And it's all about looking at the signs of the economy slowing down in America. And if the economy is slowing down drastically in America, I think that probably will happen. And, you know, the market will put in a bottom long before inflation is over, right?
Yes.
It's not like, you know, when the Fed comes out and says, all right, inflation is now under control, we're stopping quantitative tightening. The market will bottom way before that, right? Way before that. But that statement will be probably when stuff goes ballistic, right? When it just explodes.
Yeah, this is when probably, you know, the time where everybody that has failed to build up long-term position in the market again will try to build position, and then you have the situation that you have hundreds of thousands of traders who want to go long. It's like, you know, everybody who wants to exit a room out of one tiny door at the same time. So people get stuck and things will go ballistic again. Yeah, absolutely. Yeah. I'm actually looking here for one chart I want to bring up again. Where do I have it? You know, when you're looking for stuff. It doesn't really matter. Can you remember, like a couple of months ago when we started this, I had this chart where I had a layover of the S&P 500 in comparison to historic inflation rates, where I said, you see, every time we come slowly down from high inflation rates, this is pretty much where the bottom of the stock market is. So this is what you just said, you know, also backed up really by historic data, that things are starting to move in the right direction again, even before the Fed starts to slow the interest rate. So you're going to be late to the game if you wait for clear signals, for example, from the Fed saying, yeah, we don't need to raise interest rates anymore. You probably have missed a large portion already of the next bull run then. But yeah, still, guys, I know I sound a little bit more optimistic this time. And because it becomes more probable that my long-term game, that November, December is a good time to accumulate a risk on asset again, is coming true. Of course, that makes me happy that it looks like this is becoming true at the moment. But should we in, I think it's 2 weeks down the road, see surprisingly bad inflation data? And I'm talking about something like, I don't know what the forecast is going to be, let's say 8.1%, and it's 9% or something like this. Then all this is going to lie in shambles again. Then we'll have the crash of all crashes, I'm very sure. I think
so basically what you're saying is, if there's signs of inflation peaking, if there's signs of the Fed kind of easing, well, taking it a little bit more easy with the rate hikes, this move will most likely continue, and yes, this will be the bottom. And I think that's what a lot of people are betting on right now, because without looking at the stats from the news yesterday, I'm pretty sure that it showed signs of the U.S. economy slowing down, right? And people are probably betting on the Fed to take it easy. Now, if it is like you said here, if inflation continues going up, I get maybe that's going to be like the last hope. People like this might be the last hope, and then
Yeah.
if inflation continues going higher, everyone's going to be like, whatever.
But
You
I
know,
find this very unlikely, like that we really get a surprisingly super bad inflation data, because the database that is compared now is already quite high. It's like, of course, easier if you have, let's say, a price index of 100, and then it goes up to 110. So you have 10% inflation. Now your next base is going to be this 110. In order to have again 10% of inflation, this index then needs to go to 120 at least, actually even higher than that, 121 actually, to be more precise. So it becomes, just from a mathematical view, actually quite hard to maintain these high inflation numbers. They will naturally go down. Of course, the Fed will then say, like, yeah, see, this is because we were so aggressive. We did everything right. When in reality, they are always with their game behind the curve. They are reacting on a base of old data already again. But, it's also highly political, of course, what is going on there. They need to show some sort of reaction, especially because they missed the train for such a long time. Remember the statement still, inflation is transitory. That was like a year ago, I think.
yeah, exactly. So I want to, like, before we end the live stream, because I do think we have covered quite a lot here, and
Yeah.
I do like the way the market is moving right now, and I do feel like there's definitely possibility of this being the bottom, but I think we have to be careful with we have to wait for some extra confirmation. We are at resistance right now, but what I wanted to talk about and ask you is the current market conditions, right? I do have a feeling that it's not only me that is having trouble finding decent, like, at least swing trades, right? It's been, these last couple of weeks has been some of the most boring market conditions in a very long time. I mean, Bitcoin has been ranging in a local range for the last, I believe, 40 days. And if you look at the bigger picture, I believe it's been like in a high time frame range for like 130 days. And it seems like a similar condition is evident in the legacy markets, and especially the forex market as well, where we're getting hints of risk on, and then it's getting pushed down, and we're back in risk off, and then we're getting some more push to the upside, which basically leaves you in a scenario where, as a trend trader, you're getting like teased, right? It's like, we might have a bullish trend. No, we might have a bearish trend. We might have. There's not going to be any trades for a swing trader, especially not for me who's trading on the 4-hour and daily. Do you have the same view here, and same, like, how's your trading been like these last couple of weeks?
Yes, I couldn't agree more. And for me, it's like, I mean, when you do the stuff we do here, being active on social media, having Telegram groups where you want to share your knowledge, of course, you're also always happy, when you can share a trade. Not because necessarily you want to say, like, oh, look here, I made a huge profit, but to show people, okay, this is how I approach the market. This is here I found actually a trade. And in the last weeks, especially when it comes to swing trading, so positions I maybe hold on to for a couple of days to maybe 2 weeks, 3 weeks maximum, I only had a handful of trades. Really, it's and this has been going on actually since June. This is also why I'm so much concentrating at the moment in the streams we are doing here, in all the content I'm doing for PrimeXBT, also on the longer term picture, where I say, like, okay, guys, the market is very boring at the moment, absolutely. Yeah, but this is what the market does sometimes for extended periods of times. It kind of wants to put you to slumber, but then suddenly, bam, the move is there. And this is really when you need to take action as well. This is when you need to be there. I think I said this before here also. One of my mentors, when I started trading back in the late 90s, he always told me, Dirk, if you are a prop trader for a bank, or maybe later on you want to trade your own money, and you're not bored 75% of the time of the day, you're doing something wrong. Because, like Lips always is teaching you guys as well, you need to be very selective about which position you want to choose. And this sideways markets with extremely low volatility, especially also in cryptocurrencies. I mean, when did we have such a low volatility, for example, in Bitcoin the last time? I cannot remember when that was. That puts you into the risk that you kind of feel like, I have to do a trade now. Times like this are very often times where people, including myself, by the way, tend to make stupid mistakes. Pardon my English here, because they feel like this cannot be. I need to be trading. When in reality, all you need to do is zoom out a little bit, look at the bigger picture, maybe find some stuff like I just showed to you for Bitcoin, saying like, well, actually, from today, from October now, the 18 months going forward, seems like in general, this is a good time to build up a long-term stack. Yeah, long-term stack sounds boring now. We all want the trading action, but this long-term stack should be at least 70% of your whole net worth when it comes to trading. So the last 30%, at least this is how I do it, actually lower than 30% is something I use for trading. Same goes for day trading. By the way, I have a feeling the market only moves when there are news out there. Other than that, we have this sideways range. Not true for every market. I know there are some Forex pairs you are looking at the moment that move a little bit nicer and are trending. But yeah, it's difficult to find that. And this is also, sorry for my monologue here, this is also probably why we see at the moment a lot of traders that are new to the game that have a lot of potential giving up, because they have a feeling like, oh, this market doesn't offer me anything, it's boring. I might as well go and gamble on football bets or an online casino or something. And all of these traders are later going to return again once we have this trend, because most of the people are going to be late to the game. Take your time here, educate yourself. I'm 100% certain the more time you use now to put into your own education, to learn certain skills, be it like technical analysis skills, be it fundamental skills, be it especially also skills in your mind, your mindset up here, it's going to majorly pay off for you once we see a new bull market coming.
Yeah,
I think I should
I
consider a second career as a motivational speaker, I think.
Absolutely, man.
Sorry, guys.
You're great, man. No problem. You're all good. I mean, we both like there's I believe we can both talk about this for hours and hours.
Yeah.
And I'm just the same. When you get in the groove, it's like you just continue. I remember so I have this trading program, and I talked to the students yesterday, and one guy was like, yeah, this is a boring market. And I said, yeah, it's a very boring market. And I wrote that in the past, I used to start scalping in these conditions because I really wanted to trade. Mostly ended up losing money that way. So now I just wait and wait and wait. And really, so I believe that when you start trading, you're in that hunter mindset. So imagine you have a rifle, and that rifle is trading view, let's say, and you're out with your rifle hunting for a setup. You want to get that kill, you want to get that trade, and you're in that hunter mindset. So what happens is, over the course of the years, when you transition from a new trader learning technical analysis, and you become consistently profitable and a professional trader, what happens is you transition from being a hunter to being an observer, right? Because that's basically all you do. You sit around and you wait. It's like, imagine you're out in nature and you're an actual hunter. Instead of actually shooting an animal, it's like the animal comes up to you and it kills itself and hands over the meat to you. That's basically what professional trading is all about, right?
Yeah.
So you have to wait, you have to observe, and you have to kind of listen to what the market has to tell you. Because if you have an idea that today I'm going to take a trade, that's going to be a bad trade. That's going to be a really bad trade. Because what if the market isn't going to give you a trade? I remember reading the book, the Market Wizards book, and you had an interview with one legendary trader. I can't remember his name, but he said that basically what he does is he sits in his office and he waits for the market to just hand him a bag of cash, for a bag of cash just appear in the corner of the room. And that really got me thinking, because when I read that, I was really just looking for a trade. I remember, you watch when there's some sort of, day trader in the movies and like Hollywood movies. It's like a lot of action. It's like at his screen. It's like, oh, look at price is going up. It's going up. Gonna sell here, and it's like screaming and stuff like that. That it never happens. It never happens. You can't get down to your office and be like, today I'm gonna take a trade. So in these conditions, and it's very hard because you tend to lose confidence, and you start to question your whole system, and it's like, is my system really profitable? I wonder what other people are doing. Are they trading more? Are they making more money than me? What's actually happening? Why is my system not giving me any setups? And it's just like you said, we're going to have periods where this happens, and then all of a sudden it just explodes, going from having one trade a month to 10 trade a week. It's just a matter of time. And I think it's close. We're close to perhaps entering that scenario. But if we see continuation of the bear market, if this resistance area that we're testing right now will act as strong resistance, we will probably have at least a week or two of more boring markets, I believe. So I think we have to brace ourselves for fewer trades going forward. And so we have to think about, because what do, when your whole professional career revolves around taking a trade, what do you do when you can't take a trade? So you have to occupy yourself. And what would be your tips for new traders on what they should be doing when there's no trades?
Well, I can tell you what I do. I actually go out of my office and go for a walk or spend time with my family. Or, for example, I'm going on holiday now this week, Friday. We are going to Southeast Asia for an extended period of time to visit some friends and family. So I think it's important to get your mind off the market. A little bit like artists sometimes like to do too, when they're not touched by the muse, they and don't know how to continue to write the books or write their pictures. They're going out because they want their brain to focus on something else, and then suddenly they get an idea. So this is, in my opinion, what you need to do as well in times like this. At least if you're a swing trader, like Lip is, like I'm also for a certain extent. Take your mind off, do something else. You're getting probably new inspirations of this. Like Lip just said, don't force yourself to find the trade. Let the trade find you. I think this is a good analogy.
Exactly. That's great. That's a great way to put it. I think also, that there's so much more you can do except executing trade on the exchange. Like there's so much more. Like what I like to do, just like you described. Like so, for me and for you, I mean, you run a YouTube channel, you have a Twitter account, you have all of that going. So we're always going to have something to do in relation to trading, even if it's not trading, right? But if I didn't have my community, if I didn't have my trading program, and I didn't have it, like if I only had trading, I would probably be outside. I would probably spend time with the family, be out in nature. But now, we have created for ourselves another job within the trading sphere. So what I do is like I focus on, I back test a lot, right? So when there might be days when I feel like, all right, I haven't had a trade in a week, I had no signals of my system. So you start questioning the system. You start asking like, maybe I should try a new system. Maybe I should try to change the system. Maybe I should try scalping, So what I do is I take the system that I'm using and I backtest, right? I go back 1 year and I backtest. And the results are great. So there you have it. Over the course of 12 months, the system is performing very well. And even in the backtesting, you're going to have maybe 1 or 2 months or maybe 3 months within that year when there's very few setups. But then all of a sudden, there comes a week when there's too many setups for you to even handle, right? So when you do feel like you're kind of beating yourself down because you're not getting, like the system is not performing as well as it did last week or last month, do some back testing to actually see what the results are on 1 year or 2 year, or whatever time you have to do that back testing, and you'll see that it's completely normal. And it's also good to do this, because if you see that it's not normal, if what you're experiencing right now is not normal, there might actually be signs that you have to do some changes to the system. But what you should absolutely not do is change the system, because that's, when you start system hopping, you run into trouble, right? Because then you will have a negative habit of just changing system whenever it enters a boring condition. So I think there's a lot of stuff you can do to kind of let time run, back testing, do, if you want to scalp, if you really feel the urge to take a trade, and if you have to do it live, do it with such a small risk that it's not even noticeable
Yeah.
on your equity, right?
This is actually a good point. And like, for example, tomorrow I'm going to cover the interest rate decision again. I'm going to open some trades prior to this, but they are going to be mini trades. Because, of course, you want to have some action. You want to occupy your mind a little bit. It's a bit gambling for sure, but gambling with an educated guess if something like this exists. But of course, it's going to be mini positions just. Don't bet your whole account, please, on a news event.
Yeah.
But I mean, in a sense, also it's a beautiful situation we are in at the moment, because when it comes to the whole economy, there's really just two things you need to have a look at the moment. In November, the interest rate decision, that one is pretty much set in stone, probably with the 75 basis points, and especially the inflation data. And if inflation data is going to be lower again in comparison to last month, and we've seen inflation coming down now for the past month, not like by a whole margin, but gradually coming down. If it's lower again, then even if it's worse than expected, but just that it's coming lower again, that it is lower than what we saw in September, then I'm very pretty much convinced, yes, this is now kind of the time where the stock market either has found the bottom already or is finding the bottom. Long term, long term. Really, I'm thinking about time horizons of 3, 5, 7, 10 years now. And then within those time horizons, of course, we need to break it down where are good entries then for swing trades again.
All right, man. It's been a great webinar. Good to talk to you again and see what you're up to and what you do in the markets. Always appreciate you coming by and sharing your analysis. I have
Pleasure from my side.
in exactly 30 seconds. I have a webinar for the trading program on trading psychology. So I think it's a good environment to talk about that as well. So I'll have to end the live stream here. I would like to thank you all for watching here and getting in live. You see this 10% PrimeXBT deposit bonus I have here in the on the screen. If you did not get that one and didn't catch that one, I might have some more. So if you send me a DM on Twitter, I will get you that. So right, remember that. All right, guys.
Take care, everybody,
and see you all next time.
Bye bye.